Welcome to Dr. Fred Markets. This is not financial advice. While most people ignore what's happening in the markets, a few choose to pay attention. And that difference, that simple choice to stay informed, changes everything. You're one of them. Let's get into it.
The World Cup is your dumbest loyalty program, and hedge funds love that. Here's the first dirty number. FIFA expects this World Cup cycle to generate over $11 billion in revenue, mostly from selling your attention to brands who know you'll watch your team even when they suck. You don't follow a team, you're hostage to it. That blind loyalty is a balance sheet line item. Second number, the global sports betting market blew past $90 billion last year, legal alone, with live in-play bets growing fastest. You think you're edge hunting on France versus Paraguay. Books are edge hunting on your impulse control. Every bad bet is you giving up risk capital that never touches stocks, never touches Bitcoin, never touches anything productive. It dies in a parlay. Third number, the global music royalties market sits around $40 to $50 billion a year, and the most sophisticated money in the world, Blackstone, KKR, private equity locusts, has been hoovering song catalogs at 15 to 20x annual royalties. While you tilt at meme coins and same-game parlays, they're quietly buying 30 years of cash flows every time you rage stream a breakup playlist. Here's the cliff. World Cup gamblers and playlist addicts fund the exact same machine, only one side gets rich from your obsession. Let's connect this. Signal 1. Sports. Every 4 years, billions of people emotionally lever up on a flag. Ratings explode, ad dollars spike, betting volume goes feral. Your brain turns into a leveraged ETF on national pride. You're not thinking in expected value, you're thinking, my boy's got this. That is the moment the house raises the rake. Every emotional dollar you push onto the table is unhedged risk. Signal 2. Music. Same psychology, different rapper. You don't like songs, you imprint on them. Breakup, wedding, road trip, that one club night you barely remember. Those tracks own real estate in your head forever. Labels and funds monetize that imprint with ruthless clarity. Every replay is a royalty. Every TikTok trend is a micro-dividend. You're not the customer, you're the yield curve. Signal 3. Markets. While retail crowds chase story stocks and jerseys, institutions assemble the most boring, unsexy positions in existence. Contracts on attention, streaming royalties, licensing rights, synchronization payments when that 90s track hits a Netflix series. They don't need you to win, they need you to listen. The hidden connection. Your emotions are volatile, your habits are annuities. The crowd trades emotions, the pros own the annuities. Sports betting and meme trading are just derivatives on your current feelings. Music royalties are an equity stake in your future habits.
Does what you just heard make you want to dig deeper? Good, because that curiosity is exactly what brought you here, and the second part is going to take it further. Let's go.
That's the entire game. One path. You keep buying short-dated lottery tickets on tonight's match, tonight's altcoin, tonight's sure thing option. The other path. You own a sliver of every future listen, every background stream in a coffee shop, every TikTok dance set to a track you've never heard of. Here's the one concrete thing you learned today. Music royalties are basically dividend stocks powered by addiction and nostalgia. Real contracts, real cash flows, very little drama. Mechanism in plain English. An artist, label, or writer earns money every time a track is streamed, broadcast, used in a show, or sold. Those royalty rights can be sliced, securitized, and sold to investors through funds or marketplaces. You pay X today, you receive a percentage of those royalties forever, or for a set term, like rent on culture. The market roughly prices these things like a bond plus optionality. What's the current yield? How durable is this attention? How much upside from sync deals and virality? Meanwhile, you're sweating a -110 line on France, -1 goal. One is a forced emotional trade with negative expected value. The other is a long-duration cash machine on global streaming behavior. What do you do with this? Not financial advice, just the unvarnished truth. First, audit your attention losses. Add up last year's sports bets, impulse NFT mints, garbage options, YOLOs. That's your attention tax. Assume the house will keep taking it unless you write a new rule for yourself. Second, reallocate even 5 to 10% of that gambling budget into ownership of attention flows, not participation in them. That means researching music royalty platforms, funds, or public companies tied to catalogs and rights management. Learn how to read a royalty statement the same way you read a box score. Third, rewire your brain. When you hear a song looping on social media, stop thinking this slaps and start thinking who's getting paid every time this slaps. Train yourself to chase the cash register, not the chorus. You won't beat the house at its own game, on the pitch or on the chart. Your only real move is to step out of the crowd and own the rails they're all dancing on. You keep betting on outcomes. The grown-ups are buying the soundtrack. This is not financial advice. This is a reminder that if you don't own the rights, you are the product. Subscribe, come back tomorrow, and we'll find the next place your emotions are getting harvested and how to turn that into rent instead of regret. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.